Our Indian stock markets have been doing really well after the election results came out. If you're looking at the numbers, Nifty is at an all-time high. The mid-cap index, the small-cap index, all of them are performing really well and at their respective all-time highs. So the natural question in everyone's mind would be, is this the right time to invest? Where should I be investing into right now, and if the market is overvalued? So we'll get to all of these one by one. So I wanted to make a video where we cover everything about the current market scenario right now, starting from valuations, the upcoming events now that the election is done, and also going into Nifty levels and few large cap stocks which I personally think have the potential to do well over the next 3 months. This is Ajay Ajith. Welcome to Market Feed. So first we'll try to attack the question of, is Nifty or the market overvalued right now? And just like how we analyze or assess if a stock is overvalued, we can do the same using the PE ratio or the price to earnings ratio. So whenever the market is moving up or whenever the price of a stock is moving up, it is okay as long as the earnings of the stock is also moving up. Nobody will ask a question or call a stock overvalued if the stock price doubles while the earning of the stock also doubles. Earning means a profit, right? So just like that, a problem will arise only when price in the market is moving up, but earnings of the company or the underlying is moving down. That means the underlying intrinsic valuation of the company is moving down, but the price is moving in the opposite level. So that would not be an ideal scenario, and we would call that as an inflated price to earnings scenario. Just like how we do in stocks, we can use the P ratio or price to earnings ratio inside indices like Nifty 50 to try and understand if these indices are also overvalued. So let's get right into that. Currently, we are looking at a huge table with Nifty's P ratio over the last 20 to 25 years, from the year of 1999 to up to 2024, month of June, where we are at right now. And we can see that Nifty's current PE is at 22.13. And just for perspective, if you're looking at December 2023 PE ratio of Nifty, it was at 22.62. From there, Nifty has rallied up by more than 11%, but still the PE ratio remains lower. Why is this happening? Because while the market was rallying, that 11% in six and a half months, the markets or the companies, underlying companies' earnings have also exceptionally improved. And to visualize it even better, we'll go to this graph. So this red line that you see is the Nifty's performance or Nifty's chart over the last multiple years, and this blue line that you see is the Nifty's P ratio. So you can see that more or less Nifty has been trading with a median, this is a median, right, of 20.72 P ratio. So that means if you're looking at an average over the last 25 years, we can see that 20.72 is the median or the average value. So 22 is not too overvalued. I wouldn't call it too overvalued, but there have been times where Nifty moved up to 29, 24, 25, 28 as well, where it has been followed by market crashes, right? So I would say 22 is a safe place to be. So we can call Nifty not overvalued right now, considering all the macroeconomic situations, and that the PE ratio is only at 22. If the companies continue to increase their earnings, the market price moving up will also be justified. So now that's a really good indicator, right? Nifty doesn't seem to be too overvalued. It is right around the average range. And if you're looking at the major event, that is the election, it is now done. But wait, there are three major events that are coming up which could cause a dent in the market and in the growth journey that we are going to target. So the first one would be the upcoming union budget. Yes, you heard that right. Budget is coming up once again. So if we looked into the budget which happened in February, it was called as an interim budget. That means it was presented by an outgoing government, and now again, since a new government has come into power, a fresh budget would be presented by the finance minister in front of the Lok Sabha. So that will happen somewhere around the second week of July. What we are understanding now is it will happen before July 15th, before mid of July, and we'll be seeing much more volatility then. BJP has understood that it alone cannot move or take important decisions right now, and it will have to make the common people of India also a bit happy so that they will have some more chances in the upcoming state and even the next Lok Sabha election after 5 years. Moving into the second important upcoming event for the market. So as we saw, the US Federal Reserve has held their interest rate decisions. They have not made any changes for the last multiple quarters, and the US Fed have announced that they're expecting at least one rate cut before the end of the year. So that is also one major thing that everyone in the market is looking forward to, and how that will impact the markets over the upcoming months is still yet to be seen. And the third and most important short-term event is the upcoming Q1 results of corporates in India. So when we're looking at the numbers, April, we can try to understand how the markets or the sales of each companies performed. So April, we saw very high GST collection. In fact, it was an all-time high. But May, this was not replicated. Hoping that it was a May euphoria with the elections going on in the market, and with June, if you're able to get back into the usual state, I think all the companies will be getting to announce a good Q1 results by the end of July, right? So that is also a really important event. So as we said earlier, a growth in Nifty or a increase in the stock market will only be justified when the earnings also continue to increase. So keep that in mind while you're looking at the corporate results next month. Now that we understood the valuations are not that bad for Nifty and the upcoming major events that could affect the market, let's look at levels to buy and sell for the market, or support levels and resistance levels which are upcoming for Nifty. And after that, we'll also go into few large cap stocks which I personally have an eye on right now. So Nifty is now trading around 23,400 as of today, and it has broken out or given a breakout above the channel that we are seeing here. So over the last multiple months from 2024 beginning to where we are at right now, Nifty has been absolutely trading between these channels, right? So you can see here, 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 and even on the bottom side, Nifty has been respecting this channel that we are seeing here. And the only exception is a crazy election day that we are seeing here. So when Nifty has gone above this zone, I feel there is an imminent correction or a consolidation which is loading in the market. Some sideways movement or a fall before it comes back into its senses and gets back into the growth phase. So I personally feel that Nifty over the next upcoming weeks will find it very difficult to go back up further, really up from here. It might go up 100, 200 points, but not too much further up. And it will eventually start consolidating or even fall back into the channel from where it will continue its growth journey, right? So that's the view or the market view that I have right now. And the levels I'll be watching out for that. On the upper side is a 23,600 resistance zone for Nifty, and on the lower side, we'll have 22,744, which was the previous all-time high, as you can see right here. That will be a possible and very strong support for Nifty. And after that, if there is a further fall below that, I think the support levels of this channel will help Nifty move back up. So yes, currently in an ultra bull run, we can see that market is moving up like anything, but I'm expecting a cooling down period for the market where it could either move sideways or it could move slightly a bit down before starting its upward journey to the inevitable levels of 24,000 and 25,000 over the next few months of time. The ever so strong SIP inflows in May and the slowly returning FII investors are also giving confidence that the market will have some support from here. So do keep that in mind also while you're investing. There are a lot of domestic institutional investors who are sitting rich with cash from SIPs and direct mutual fund investments. They are there, and also FIAs are slowly returning after all the crazy selling over the last 3 to 4 months. So now let's get into few stocks which I feel have the potential to do well over the next 2 to 3 months. These are not investment advice. These are just stocks that I'm adding in my watch list to watch over the next few months, right? I'm not a SEBI-registered research analyst, and these are not stock recommendations. Do make sure you do your own studies before you get in or out of any stocks. So the first stock that I'm adding to my watch list is Dr. Reddy's Labs. The stock performed really well over the last cycle when pharma was doing really well, and it hit a fresh all-time high of 6,500. So now that the rest of the pharma index is also starting to move up, Nifty Pharma hit an all-time high today. I think Dr. Reddy's Lab will also follow. It is a fundamentally good company. The earnings of the company is really good. It's a Nifty 50 company, and now it's available around the 200 days EMA range, right? So since the 200 days EMA is also very close by, I think the risk to reward ratio in the stock can be really good. So let's move on to the next one. The next stock, which is Bajaj Finserv, should also be catching the interest of both short-term traders as well as long-term investors. So the stock price is currently trading at around 1600 rupees, and it is at the same level it was trading more than 2 years ago. But if you still keep scrolling back, even in the year of 2021, it was around the same ranges, right? So around 3 years, the stock is trading in a similar zone. It is still continuing to consolidate. At the same time, if you're checking out the revenue and profits of the company, you can see that revenue has gone up from 60,500 crores to more than 1 lakh crore last year, and at the same time profits have jumped from 9,800 crores to 21,000, but the stock has not moved at all. And if you're looking at the PE ratio, you can see that the earnings per share is continuing to increase, and the price to earning of the stock is very reasonable, which for such a growth stock, I feel 30 is also a reasonable PE ratio to have. It had certain restrictions which were put on by RBI on acquiring new customers, but by the end of last month, they have cleared all this, and they have started their fresh account opening processes where they're starting to give out more loans and credit cards. So that is a good indication for the stock in the short term. But even for the long term investors, I think this should be a stock that you should have in your radar, just for the fact that how much value it is creating, but that the stock price is not reflecting that. The third large cap stock which I think you should have an eye on is Punjab National Bank. I feel the growth story in the PSU banking sector is not done yet, and I think Punjab National Bank might be a stock which gives tremendous value over the medium to long term. But even for the short term, there is a case to be made. So over the last multiple months, it has been in a consolidation zone. So while stocks like SBI performed really well before the elections, PNB has remained cool whatsoever. And the 140 zone, if you zoom back into the monthly view, and if you look at the long term view of the stock, I think the 140 zone is going to be very important. And once that is broken, there is a potential for it to be broken. There could be a long term breakout in the stock which could be loading, and it will continue in the growth journey that we are seeing in the PSU bank story. So yes, let's wrap up the video. We saw that Nifty is not that overvalued. We saw about upcoming major events which are going to affect the stock market. We saw important levels and possible trend of Nifty in the upcoming months, and in the end we also looked into few stocks which you should be having in your watch list. So that's it for the video. Make sure you hit the like button if you enjoyed the content, and that you subscribe to the channel as well for future videos like this. So until next time, this is Ajay Ajith. See you all. Bye bye.